Good morning. My name is Dennis Bacon. I'm the Chief Investment Officer here at Beyond Wealth Advisors. Today, what we want to do is give you a little bit of an economic update, kind of tell you where we have been in the market here recently, and kind of what we see going forward. Since the election, we've had a very robust market. Almost all the indexes have set new all-time highs, with the Dow going over 30,000. Nobody really expected that. The week following the election was one of the best weeks ever following an election. And so some of you may ask, why has this happened? Well, I think there's a few reasons. One, which we've talked about in the past, is the fact that it appears we're going to have divided government, or at least both the House and Senate are going to be very close. The number of Republicans and Democrats they have is going to demand a little bit more discussion between them, maybe a little negotiation to try to come up with solutions, which is generally a good thing. But the most important thing that has driven this is the third quarter earnings reports by many corporations were much better than expected. This is always good for the market in the face of the COVID pandemic that we have had. We're also seeing what looks like we're going to have some vaccines that are going to be coming on board. They may come on a little slower than what the media says they will now, but we do expect that by the time we roll around to summer of next year, there'll be plenty of vaccines around for everybody that desires to take those. And that's going to be really important for the economy. It allows us to broaden out. In the month of November, we kind of had a beginning of that broadening out. Actually, the leading sectors of the market were energy, financials, industrials, materials. These are the things that have been lagging the most in the market. Now, your technology, communications, consumer discretionary, and healthcare all did very well, but these areas that have been lagging really did a lot better. And so that's the broadening that we have seen and what we hope to continue to see. As we look forward to 2021, there are a few headwinds out there. We look at what's going to really happen with the policies that's going to come out. That's going to be something that's going to be a question that we really can't answer today. We hope that we'll see modest policies come out that will be pragmatic and work and help the economy. Probably a little broader than what some of the Republican administration did, but as we've talked before, the Republican administrations versus Democratic administrations, from a market standpoint, don't matter just a tremendous amount. We do think that the COVID issue still remains the one front and foremost issue that needs to be addressed, and the market's kind of assuming that's all being taken care of. We do expect to see the large cap area of the market probably do a little bit better than small cap, mainly because of the uncertainty issues. We're looking on the international side. We're seeing a lot of strength come out of the emerging market areas and the developed markets ex-Europe. And that's going to be a really strong thing to look at, because as we move forward with the U.S. debt that it has and some of the changing policies, we do expect the dollar to weaken some. Nothing dramatic. It's been very strong for a long time. It's been weakening over the last year. We expect it to continue to weaken. That actually is really good for our exports. Allows all the exports we have. I know we have some grain sales and some other agricultural sales that have been announced that should be going to China. This is going to really help them and from a profitability standpoint. And so we expect that area to do well. We do feel like emerging markets probably is an area that we will probably want to make sure and pay attention to from a positive standpoint. That should be very good going forward. And the other area we people should look at is interest rates are so stinking low, and that where do you find income? Well, that's not going to change a whole lot over the course of next year. We do think interest rates are going to rise. The 10-year Treasury up to the 150, 160 range. That's a very good possibility. That's going to put some stress on the value of your bonds. As the interest rates rise, the value of your bonds will go down. So we are going to see that happen some, so we want to watch that real closely, that those interest rates don't rise too much, but we don't see a lot of inflation. So because of that, that should keep those interest rates down. On the market standpoint, going forward into 2021, we're seeing projections all across the board, from a 6% gain, which puts us up to about 3,900 on the S&P, all the way up to a 20% gain, which puts us up to like 4,400 on the S&P. But all of them are projecting a positive 2021. And I think that's great news for us going forward. I think as we look forward and what we're looking at, Right now, we're in the lame duck session of Congress and for the president. And so you're not going to see a lot of robust activity here in the next month or two. It usually is, they talk about the first 100 days of a new administration, which actually puts you all the way out until the end of April. So we're not going to really see a lot of legislation come out until we get into March, April timeframe, more than likely. So things may be relatively calm between now and then. News may cause volatility. We do expect 2021 to be a relatively volatile year. But remember, volatility is also a definition of things going up a lot as well as things going down a lot. So that volatility, we do see a lot of moves coming. Hopefully not as dramatic as we had in 2020, but we will see some volatility. So as we move out of 2020, which most of y'all I know will be happy to see it gone, we do expect to see 2021 to be a very good year on the economy and to move forward and continue to do your investing prudently, keeping in mind the risk levels that are appropriate for you. And we wish that each one of you out there have a great holiday season and enjoy your families to the extent that you're able to in the current environment. And we look forward to talking with you with outlook for 2021 more comprehensive in January. Thank you very much. Have a great day.